Good evening, everyone. My name is Paul. I'm just going to walk you through the gross domestic product for Canada for December 2015. My agenda is I'll look at the summary. I'll bring out some key quotes from the private sector, including the banks. I'll look at expenditure GDP because there's different ways to look at GDP from expenditure to an industry. I'll do a quick analysis where I kind of group the key areas, just look at the percentages, just to kind of talk a little bit at length about those areas, and I'll look at growth targets and issues. So at a high level view, GDP was we grew at less than 1% last year. That's year over year growth. But there's some good positive signs in the economy. The agricultural food sector, which was only about $27 billion, actually had a pretty strong year last year, driven by both forestry and the food sector. So really that's a good sign. It's not strong enough to offset other areas like energy, but at least shows you from the housing starts to food processing, we had a pretty good year there. Manufacturing is down by 1.1%, but there's some positive signs within manufacturing, like automotive production had a banner year. So you can see some of the aspects of the economy had some good years. Retail sales had a pretty good year, so that's why you're seeing with GDP around warehousing, distribution, leisure spending, consumer spending was up in the year. Here's some key quotes. The bank basically said they thought possibly we'd have flat or 0% growth. We actually exceeded that. It's a little less than 1%. It's down from what the government had budgeted for in terms of its growth projections, but it's still good considering the pressure from the commodity prices, the low Canadian dollar, and global demand shrinking the past year or so. So that's something to bear in mind. Another key quote that I'm bringing in here is the Bank of Montreal. They're talking about business investment. So that's a key driver because capital investment means if companies are actively expanding their business, then they were putting more capital to expand in equipment. And we've seen a drop in the fourth quarter for capital investment. This just gives you a good example of how things are broken out into key areas. And if you look at the percentage change, that's where you're seeing the business gross capital expenditures down. But if you look at other areas that are driving some of the change, you're seeing some government expenditures up a little bit. And you're also seeing some other areas in terms of the overall household consumer consumption was up marginally as well. So you're seeing that, and that's a big area of spending, so you can see that's where that's coming into play. Goods producing, this just gives you kind of a chart. So service producing industries are up about 1.7%, but where we lost a lot of it is in goods producing, but mostly driven by the energy and the construction and utility sectors, of which are down significant last year. This kind of gives you an idea that the overall goods producing side, this is month over month comparison, so we've started seeing some traction since we've seen a decrease in September in the first half of the year, so we've seen some recovery there. Now what I want to pull out here, and this is critical because there's a budgeting process going on here. The key area of the economy here is I'm breaking it up between two segments. The resource sector includes oil, natural gas, and mining to basically show you its impact. So that when you hear government talk about policy, they're really not talking about the clear facts of what drives an economy here. The resource sector is a critical driver that provides that taxation dollars that can be used to help promote clean energy and clean technology programs, or R&D programs like Sustainable Development Technology Corporation. That's not ever talked about in terms of the support. We do have a vibrant clean technology sector, and it's part of its GDP is about $44 billion, but it's still nowhere near the resource sector, and the resource sector is still a key driver. That resource sector means we need to get environmental assessments dealt with, we need to look at pipeline expansion, we need to look at port expansion, we need to look at the whole thing to get our goods to market. All we've ever heard so far with government discussion is it's not a balanced approach. There has to be a balanced approach to support clean technology and new investments on information technology, but also support the other industries as well. And that's what I wanted to highlight here with this graph. Let's talk about clean technology. There's no such thing as clean technology. It requires raw materials like lithium, rare metals, vanadium. It also requires to be manufactured, prefabricated, which requires a heat source, as well as aluminum, plastics, steel as part of the overall. So when you look at your cell phone, it's got plastic, it's got lithium batteries in it. Those are all raw materials. GDP growth, this shows you where we're going to be heading in the next year or so. And we're seeing sluggish growth, but that's worldwide growth. Worldwide growth is down compared to where we've seen in previous years, and that's something to bear in mind because that impacts exports, and exports are key drivers as part of the economy. Now, what are the issues facing GDP? Well, there's a federal government budget that's coming out. Nobody knows clearly what kind of money there is, but there is talk of a stimulus up to somewhere around $30 billion being spent. Now, there's one thing about propping up a government in terms of spending. It has to be prudently done in terms of supporting infrastructure spending that supports exports or self-sustaining projects like transit, so that has to be in mind. We're also going to see some government policies that's going to impact the cost of goods sold as well as disposable income, like carbon taxation, pension plans, but they're not. Some of these plans won't come in immediately, but they are something to bear in mind. We are seeing weak to slow growth globally, and we are seeing the trough in terms of where commodity prices. Consumer spending, it's still targeted to grow next year, but due to how other policies may come in, it may be impacted by changes in taxation policies. So it's very critical as you listen to the debate of the budget cycle or listen to the debate from provincial side that you clearly understand without a strong economy, without a strong GDP, and a private sector growing, it doesn't support the corporate or personal taxation. It's the corporate taxation, personal taxations that drive government spending. It's something that's hardly talked about in terms of the overall money flow, but it's something that you need to bear in mind. Thank you.